Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar. All right, traders, we left you off with the last video, which showed you a pennant in the market. Looks a little bit like this. You know, a pennant, of course, has a formation, something like that. Sometimes they can look like this one over here, where you go down and flat. In any event, they are pennants, and the markets will do something dramatic when they break out of those pennants. So what I'd like to talk to you about in today's video is pennants, flags, and where markets go after a breakout of such. Another thing I think we should discuss here is what we like to call OTAPMA. It's the Omni Trading Academy's proprietary moving average. With that moving average, I have showed you in many videos over the last few months how once we got down through it in the daily, it started to break down. We're talking about the S&P and the indices right now. And then once we got through it in the weekly, we really started to break down. And now we have pierced the OTAPMA, as I call it, the Omni's Trading Academy proprietary moving average on the monthly charts, traders. The last video I showed you a series of daily, weekly, monthly. We were through the daily, we were testing the weekly, and we weren't through the monthly on the downside. Now, in indice markets around the globe, we are through the Omni proprietary moving average on the monthly charts. Traders, if you go back and watch the progression of these videos, back at the end of last year, I was already telling all of you traders it looked like the top was in the stock market because for the first time in many years, we got below the Omni proprietary moving average. So I will show you a bunch of charts that indicate where we are going, or at least what that looks like. But the important thing about this lesson today will be the pennants and the flags, because I am going to show you what they look like now in the indices around the world, at least some of them, and then I am going to show you what they look like in the currencies when we show them to you, and what happened to currencies since we broke out of the pennant or flag, or however you want to call it. You'll see by the end of the chart segment what I'm talking about and how it will help you going forward. Traders, there's a lot to discuss. There's a lot of charts coming up here. So get ready, get a pen and paper, pull up a chair, pull up right in front of your screen, and pay attention to what you are about to see next, because I assure you it's going to open up your eyes and help you decide for yourselves, after doing your own homework, where you think these markets are going this week. Remember that we are day traders, and everything we show you, yes, has a long-term view, but is geared for trading tomorrow. This video is being shot on Sunday evening for Monday, 10/27/08, and it is our weekend webinar. So traders, again, pay attention. Let's go to the charts, and I'll show you what I'm talking about. Okay, traders, the first chart I'm going to show you in the series of charts this afternoon is the Nikkei, the Japanese stock index. This is the Nikkei market. If you remember, if you look at the last video we had posted just a few days ago, I showed you that we had a pennant right here in the S&P market and in the Dow. And I thought that we would stay within the pennant and then we would break out of it to the downside. Here you are, we stayed within the pennant, finally broke out, all the way down to here so far. That's the Japanese market. We have many markets to look at here, so let's look forward. Remember this formation because it will become important when you see the currency charts at the end of this segment. Okay, traders, the next one we are looking at now is the FTSE from London. The FTSE is the London stock market, so to speak. It's their stock index. And as you can see, although not the exact same shape, another pennant that we're coming out of, and we did come down and broke out of it on Friday, and it looks to me like there will be more downside work here. Traders, what we like to look at when we look at pennants and flags at the Omni Trading Academy is we check for a flagpole first. That's a market that drops straight down, then stops, and then puts in this triangular formation. When you get that, the likelihood is the breakout will be to the downside, not the upside, because the flagpole is facing down. This is very simple work, traders. If you take a look at this in conjunction with your indicators, you will understand why we are looking for more downside. And almost always when you get a flag and then a pennant comes at the bottom of it, many times the breakout continues in that direction. Just so that you understand how they work, if the flagpole was this way, and then you got some action like this, the likelihood it would break out and go in that direction. But that's not what we have right now. We have the ones that look like this all over the currencies and all over world indice markets, and we're going to go through a bunch of them. So watch what happens when you break out of these pennants. Let's go to the next chart. Okay, traders, the very same chart we left you with on Friday last week. Showed you, actually it wasn't Friday, it was probably more like, what, Monday, Tuesday, Mike? Is that when we did that video? In any event, traders, we left you with this pennant and said, here's the flagpole, here's the formation, the likelihood is it will break down and continue going lower. Well, since we left that video out, we have broken down severely and have come all the way down to here so far. And I tell you, traders, from the looks of things, we have a long way to go. Now you've seen a couple of world indices, right? We're going to look at a couple of more, and we're also now going to look at what happened when these markets broke the Omni Trading Academy's proprietary moving average and started to break down on the dailies. Then what happened when we got below on the weeklies, and now what it looks like on the monthlies. The next few charts that you will see will depict all of that for you, so pay close attention here. Okay, traders, that last chart that you just looked at was the daily S&P, and you've seen where it broke the Omni's proprietary moving average. Here is the weekly now on the S&P. As you can see with the weekly, look at the respect that has been paid to this average. The average, obviously, is this one here. Anytime it got near it, it bounced. Got near it again, it bounced. Went up, came down, got near it, and bounced. Went up again, came near it, and bounced. And then, what did it do? Put in a head and shoulders on the weekly and broke the Omni's proprietary moving average for the first time in years. Then it went down, it went back up and hit the average from below to above, failed to get above it, and look at the break we've had since. That's the weekly. You saw the big break on the daily. Then once the weekly proved it was going to stay below, we had a big break. Now, if you get below the Omni Trading Academy's proprietary moving average on a monthly, that is really serious downward movement if you're broken on the downside. Let's go look at the S&P monthly chart now. Okay, traders, the S&P monthly bar chart. Two things here, a double top. One of them came in 2000, the other one came in 2008. The market broke severely from the double top, but here's the important thing. Look what happened. We just got below the Omni's proprietary moving average. Look at the monthly. It got below, settled below, and look at this month. After it got below, traders, this is a larger bar than the entire move in 1987. The last crash we had took some time from the top of the move to the bottom. This one bar you're looking at right here is more movement than that entire piece of action during the last market debacle in the 80s. And I think we are just beginning. Again, you look at the size of this monthly movement, it is larger in size than the entire drop back in 1987. Now we're going to look at a few more charts around the world, a few more American indice markets, and what they look like on the daily, weekly, and monthly around the Omni's proprietary moving average. Let's go take a look. Okay, for our German fans out there, the German DAX, this is the German stock indice. The DAX, traders, important here. One thing that's important, you're below the Omni's proprietary moving average on a daily. You had a big break, but here's the important part of this. First, you put in a flagpole, then you put in your pennant formation, and look at the break that happened when we came out of the pennant. Bam, 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 all the way to here on Friday. Last Friday, the last trade that happened since this video. We have broken down big out of that pennant, and if you ask me, we're nowhere near as low as this thing's going to get based on the action you're seeing here. So that's the German DAX on the daily. Two things to keep in mind. Omni's proprietary moving average and this formation that keeps showing up all over the charts. Let's go take a look now at the weekly. Okay, traders, the German DAX on a weekly, and again, look at how it never came near this average all the way to here. Then it finally has a big breakdown, gets below the average. Once it gets below the average, traders, look what it does. It goes up, it tests it 4 times, fails at every test, and breaks. runs up, tests it again twice, and breaks, and look what happened. Bam, bam, all the way down to here. Why? One of the many, many reasons, one of the many technical reasons, is because we are now below the Omni's proprietary moving average. This average works extremely well, traders, and it works on many, many sectors on many different charts. So take a look at it for yourselves and take a look at what's happened now. So you see the big break on the weekly. If we get below this on a monthly, it's going to get ugly. Let's go look at the monthly chart of the DAX now. Okay, traders, the DAX. First off, do you see anything familiar on this chart? Just like the S&P did back in 2000, put a top in. 2007 to 2008, put another top in, which equaled it. And we've been breaking down ever since. So there's a rule right there, right? Sell double tops. What happens next? On the monthly chart, we get below the Omni's proprietary moving average, and look at the size break we've witnessed so far. This is the first bar that settled below the Omni proprietary, and look at the break already, traders. It does not look to me like this market is bottoming out by any means. Like the Nikkei doesn't look like it's bottoming, or the S&P. The DAX does not look like it's bottoming either. Double tops, sell double tops. Get below the Omni proprietary on the daily, weekly, and now monthly, traders. That is big, and that is something for you to keep your eyes on. Let's look at a few more charts now because we're not finished yet. Okay, traders, once again, we are going to look at something, and it is the Dow Jones Industrial Average. And again, two things here. When we finally got below the Omni proprietary moving average, we called for a big break. That has been happening on the daily. But now, what's happening right now, right here as day traders, we have our huge pole, we have our pennant, and we have broken down and out of it and are sitting down here right now. This pennant is extremely important. Watch the way it shapes up on the indice markets, traders, because you will see what happened on the currency markets when we broke down out of these pennants. So watch, you're going to see a lot of them. Again, on the daily, we're below the Omni proprietary and big drop. Let's go look at the weekly now for the Dow Jones Industrial Average. Okay, traders, Dow Jones Industrial Average weekly chart now. The weekly, once again, look at the respect being paid to the Omni's proprietary moving average all throughout 05 and 06. And then we get below it, test it, and fail on May 23rd of 2008. This is the weekly of the Dow Jones Industrial Average. Once we pierce the Omni proprietary moving average, look at the size break that we have seen since, traders. You've seen the daily, you've seen the weekly. Let's go take a look now at the monthly chart for the Dow Jones Industrial Average and what it's doing around the Omni's proprietary moving average. Okay, traders, once again, you are looking at the Dow Jones Industrial Average, but now it is on a monthly bar chart. Look at the monthly bar chart. Traders, we haven't been below the Omni proprietary moving average since 2002 to 2003. That's the last time we got below it, and it didn't last very long. Look at this one. Now here's the average moving along, right? The monthly gets below it right here for the month bar of September into October. September's bar is here. October's bar is here. That is a larger bar than this whole entire movement last time we were below. There is something major going on here, traders. You usually do not find markets and multiple markets below the Omni's proprietary moving average. Many of them are now, and they are just heating up, in my opinion, on the downside. Let's go look at a few more markets, traders, because we have a lot of charts here to show you. Okay, traders, we are now looking at the NASDAQ daily bar. This is the NASDAQ cash daily bar. Once again, below the Omni proprietary moving average, right? We get below it there. Once again, below, test, failure, and we start to break. Well, now we have our flagpole. We have our pennant. This one is not like the others that you've seen because they were more like this. But it does not matter if the bottom is flat or if the bottom is curved. It has a line to it. It doesn't matter if it's pointing up or down. It still qualifies as a pennant. Take a look at this, traders. The NASDAQ pennant has been taken out on the downside, settled right at the bottom end of it, and this is what this video is going to be about. The more charts I show you, the more you will understand why by the end of this chart segment. So now NASDAQ daily, of course below the Omni Proprietary, we knew that a long time ago, but has formed the pennant which is calling for more downside. Let's look at the weekly and the monthly. Okay, traders, the NASDAQ cash weekly chart. Here we are. It got below the Omni Proprietary moving average with one last breath on August 22nd, 2008 on the weekly. And look at the break we've had. Plus, it took out a major, major support line, which goes back for years. Took that line out and just crashed on the downside. So the daily looks lower for sure. The weekly now is below the Omni Proprietary, and you will see in a moment, so is the monthly, and that is really important here, traders. Let's look at that one. Okay, traders, once again, NASDAQ monthly bar chart this time. This is the NASDAQ Indices monthly bar chart, and you can see that we had a major drop since we've gotten below the Omni's proprietary moving average. We haven't seen it get below that average since 2006. Here it is now, 2008. It's back below it again, and it looks to me like it's going to spend some time there. So remember, the dailies, the weeklies, the monthlies. It started with the daily penetrating the Omni Proprietary, and we pointed that out to you before this down move started. We got through the weeklies. We were halfway down through this major, major debacle that we're all getting. The whole world is feeling it. And now we are through it on the monthlies, which tells us there is much more downside coming. Yes, there could be rallies. Yes, those rallies will need to be sold. Let's look at a few more markets here, traders. Okay, traders, many of you have heard me say this in many lessons at my academy and in many of these YouTube videos, that the leader of the indices is NASDAQ and Dow Jones Transportation Average. Transportation Average is the leader. NASDAQ usually runs behind it, and then you'll get the S&P to follow the NASDAQ. Well, we have, of course, the Transportation Average has put in that very same pennant that you've seen all over the globe, all over these charts I've shown you, and has broken down out of that pennant pretty strongly right now, and in fact is testing its previous lows. That is very interesting, being that it is the leader. Another thing I found quite interesting was that it broke out of a huge apex right around the spot where we expected to break out, around the 75% mark of that apex. You had a false test at the 65, and at the 75 it went for a ride. So you have the leader pointing towards more downside. Then it puts in this pennant formation, again pointing towards more downside, and that's on the daily. Let's go look at the leader and what it's doing on the weekly and the monthly. Okay, traders, we are looking at the Dow Jones Transportation Average once again. And you can see that on the weekly, it's gotten below the Omni Proprietary Moving Average and has had major, major downward movement. Now, if you follow this, you'll see it had great respect for this average all the way through its bull market. And as soon as we started to become bearish, and here's why I know that the Transportation Average is the leader. You are looking at April of 07, and already in April of 07, it started to get below the average and whipsaw around it. It was the first of all the indices to get below that average. It happened in April of 07. Everything else went all the way out to October, November before it got below. September, October, November. This one did it in April. The leader led the way, got below our average, started messing around, and then finally broke down. So the leader, absolutely the Dow Jones Transportation Average, because everything that we're looking at happened on that chart first. Then the others followed. So now you see that the weekly has severely broken the Omni Trading Academy's proprietary moving average. Let's go look at the monthly here. Okay, traders, we are now looking at the Dow Jones Transportation Average, of course, who we think is the leader. The monthly bar chart. Look at the respect that the leader has to this average on the monthly. It doesn't want to know anything about breaking it until what? Until Rocktober. What happens in Rocktober? It pierces right through it and goes all the way to here. And traders, we are not finished. The month isn't over. This move isn't over. There's a lot of room on the downside here. So now you see the Omni Trading Academy's proprietary moving average working on the dailies the weeklies and the monthlies on indices across the globe. Not just U.S. indices across the globe. You can see what's happening here, traders. You can see it for your own eyes. We've been pointing this out since it started, and we have been on the correct side, calling for markets to drop since we got below this average, and of course for many other reasons, but that was our catalyst, and it has been working. Why would we even consider that it won't continue? I don't. I will let the market speak to me. Unless they get back above and seriously above and hold, we will continue on the downside. Let's go look at a few more charts here. Okay, traders, that whole lesson I just showed you was so that you can see two things. The Omni proprietary moving average is working at full steam. All 8 cylinders are kicking. And what happens to markets when they come out of a pennant formation. Currencies went into a pennant formation before the indices. Here's a pennant formation. What happened after that, traders? Can everybody see what's on this chart right here? Look at the severity of the break since we came out of that pennant. If you've been following along, that's the same look that all the indices have right now. The very same look. So what happens when you break out of a flag or a pennant? If the flag's pointing lower, the move will be lower. Euro currency daily bar right there before your eyes to give you an indication of what will likely happen to the indices, stock indice markets, now that they are getting below that very same formation. But that's only one chart, right? Let's look at the results of a few more charts that created that formation and what happened after it came out of the formation. Traders, Canadian dollar, nothing to do with euro currency, right? Completely different country. Well, take a look at this. You get, of course, we're below the Omni proprietary. We all know that. You can see it. But look, the pole comes in, the pennant comes in, and look at the severity of the break on the downside that happens after you get out of the pennant. Boom, 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 boom. Down, down, down. That's what these pennants produce. Downward markets if they're bearish. If the pole is up and the pennant's here, down you go. Well, the pole comes from the upside to the downside, the pennant's here, and down you go, right? That's what I showed you on the other charts should happen. Now I'm showing you what did happen in the currencies because these pennants were created first in the currencies before we started seeing them show up in the indice charts. Let's look at a few more, traders. All right, traders, we are now looking at Australian dollars. Once again, daily Australian dollar below the Omni proprietary moving average. The down move begins. Now, recently, the pennant gets put in. Here it is, the pole, the pennant, the break. Boom, you're down to here already. That's what happens in currencies when they form pennants. But more than that, that's what happens in almost all chart constructions when they form pennants. Let's look at a few more here and see if we can convince you of what's going on. Traders, look at the one in the British pound. If this doesn't open up your eyes and show you the most likely direction coming forward soon in indices, nothing will. Flagpole or pennant pole if you'd like. Pennant gets made and look at the drop. Break, 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 break. Big break. We're all the way here. Wow. That, if you ask me, is absolutely amazing. And what a tell these pennants are. Remember, you got these very same formations right now in many, many of the world indice markets. Let's look at a couple more charts here. Okay, traders, if you think I'm not doing homework, I'm even looking at the Brazilian real right now. The Brazilian real. What happened to it? Respects the Omni proprietary moving average. Finally breaks it. Look at the size break. Now, what does it do? Puts in that same pennant that every other indice, or I should say right now, currency put in. And look at the big break that we've had since. The pennant will tell you what's coming next, especially if indicators are in sync with the direction of the pennant and many other markets that follow along with it. I've looked at many currencies. The Brazil is one of about 25 I looked at that all look the same. I just didn't want to show you 25 different currencies. This is basically to show you what happens when you come out of the pennant formation. Let's look at one more chart here. Okay, traders, we are now looking at the dollar index daily bar chart. The dollar index daily bar chart. Okay. From what you can see, and traders, anyone who's been following me, you know right here, day one, we called for this move. We followed it up. We called for a short when it got there. We called for a long about here, and we've been long ever since, at least in our view of direction, where we think U.S. dollars are going. Ever since it got above the omni proprietary, it made a major, major move higher, and this is what this whole thing amounts to at this point in time with currencies. The U.S. dollar index will continue to attract more investment money from across the globe over the intermediate term. I told you this when we were here, traders. I reassured you when we were here. I am here to tell you once again, we have major upside to expect in the dollar index. We've had major upside. There will be more major upside coming. Pullbacks will need to be purchased. So, you've seen those charts, traders? There had to be 24, 23, 24 charts right there, and almost everyone had one of those pennants that I'm showing you, and everyone had a direction out of the pennant. Now, we have that same setup in all of the indice charts. Now, traders, speaking of the currency markets, and you've heard me say this in a lot of my videos, before this move started to unravel and shake the core of Europe, I had mentioned to you, it looked to me like there was going to be a lot of trouble with a lot of European nations because you have 15 of them. 15 countries in the Eurozone trying to make a decision to help out. And here's the problem with that. If you are the president of a country, your people are calling out to you and they want help now. They don't care what the other 14 nations have to say. They have starving children. They have money in the bank. They want that money secure. They want their 401ks and their pensions to survive. And they don't want to hear nothing. You're their president. You got to do something about it. Now, when that happens, how do you get 15 leaders of countries to get together and come up with one decision? First of all, the people of the country, they want it now, right? I want it right now. I don't hear about next week. I don't want to hear about next month. You have to help us. What's happening? Right off the bat, what I had told you in many videos was that I thought the euro currency might end up turning into dust and disappearing. Look, traders, it's a very short-term currency. It only came out in the beginning of this century. This is 2008. It has not been around that long. U.S. dollars at least have been around for several hundred years. You can count on U.S. dollars when the world goes crazy like it's going now. So with that in mind, I basically told everybody who watches my videos that I thought the dollar was just going to soar and really take off based on what's happening in the world. A lot of my reasoning was because the United States realized it had a problem first with the real estate, with the banking, with subprime, with the whole economic package. The United States government realized the problem was coming first, started lowering interest rates as quickly as they could, then started handing out money to try to fix the banks, buying some of the stocks, buying some of the toxic paper. We attacked our problems first. Then Europe found out that they had the very same problems. Now the whole rest of the world is realizing it. And I said to everybody, the likelihood is that U.S. dollars will explode now because it's likely the first currency or the first country that will come out of this trouble. All right, that was 2 months ago. If you look now, it is absolutely happening. And what else is going on? Well, Mr. Nicolas Sarkozy, everyone must have heard of him recently, right? President of France. You know what they have right now? The number one selling product in France? It's a voodoo doll that looks just like him, so you can stick pins in the guy, all right? He has essentially annoyed Prague, Luxembourg, Germany, London, and most of the Eurozone is at odds with him because he's trying to protect the economy of his people in his country. You can't blame the guy, but that's just the beginning of what I thought was going to happen here. You saw what happened with Germany. Immediately they decided to make a move to protect the banks and the deposits that were in the banks, and the rest of the Eurozone went, oh no, now you have Sarkozy. You have a lot of problems out there, traders. How are we going to get these 15 nations to all come to any one decision? I hope and pray for them, my European fans and friends. I hope we're all going to be okay. But I have a feeling you're going to have to put your money in U.S. dollars right now. So keep that in mind. Those charts would have you think so. The world turmoil would have you think so. And the fact that the euro currency is such a young currency and is already having so much trouble, who knows, traders, who knows? I'm not trying to predict the end of the euro, but I got my eyes open and it's something that could happen. Now, we talked about this weeks ago, and it is starting to materialize, which is another thing to tell me, maybe I'm going to be right. Holy cow, let's hope not. but we'll see what happens. All right. With all of that in mind, the currencies started to have their problems first and put in certain formations. They got through the Omni proprietary moving average on the daily and the weekly, but not yet on the monthly. Some of them have not pierced on the monthly yet. Some have, some haven't. The S&P and all of the indice markets have absolutely pierced the Omni proprietary moving average on the monthly, which basically shows you where the currencies are going to go. So in this video, confusing as it may sound, the pennant formation that I showed you in the currency charts will tell you where the indice markets will go. And at the same time, the indice markets breaking down severely through the Omni Trading Academy's proprietary moving average should tell you where the currencies are going to go. So this is a pretty good video, traders. Make sure you pay attention to that chart segment. So I just wanted to get that out. I want you to see it for yourselves. I want you to have a clear vision on where we are likely going this week. We are short-term traders, so we don't care where we'll be next year. We care about what we're going to do in the next few days. All right, traders, so keep these charts in mind. I assure you I've done hours and hours, months and months of homework on these charts. Every day and night of my life I'm doing this homework. And in fact, if you like the way that I've presented these charts to you and the way I view the charts and how we call market movement based on those charts, well then, come on down to the Omni Trading Academy and allow me to be your personal analyst, because I would imagine right now you need an analyst like me on your team. I know what's going on out there, traders. If you don't have somebody with my experience behind you, then come on down here and allow me to do that for you. One of the best ways you can do that, by the way, is to open a trading account right here at my firm, and I can be your personal broker. I do accept accounts. I know I don't usually say it that often. Maybe 3 or 4 videos this year I've said it, but I am a broker, and I would like to be your personal broker. And I kid you not, traders, I know you got to be looking for some help right now. I am here to help you, so come on down and allow me to help you. All right, what do we got going next? We have winners on our trading contest, baby. Yeah, trading contest. This, I believe, is our 3rd contest. We give out cash prizes for these contests. The winners, 1st, 2nd, and 3rd place winners, get cash prizes. We start you off with a $10,000 virtual trading account. It's all simulated trading. You try and use the techniques that we teach to you here at the Omni Trading Academy and see if you can win the contest. And then, of course, we give you cash prizes. With that in mind, the winners of last week's contest, the site names are 1st place, DIP. All right, DIP. DIP comes in with $15,800 in profits. So that would make your account go from 10 to 25.8. You go DIP. What a monster week. 2nd place is Jimmy, site member Jimmy. Jimmy, you went from $10,000 to $10,847. Is that right? $10,847.50. Very nice, Jimmy. Yo, baby. I hope I can make $8,000 next week like you did. 3rd place winner is Netcam. Netcam goes from $10,000 to $11,725. Is that the figure I'm looking at right there? Very nice, Netcam. You made $1,725. Good job, Netcam. Traders, come claim your cash prizes and start signing up for next week's trading contest so we can give you cash prizes for winning. Traders, with the contest, it helps you, it helps the other traders who follow what you're doing in the contest, and it shows me if the techniques I'm teaching are doing any good. And what results like this, whoa, baby, whoa, beautiful. Okay, woo, it's been a long, long weekend of study. Those charts, I kid you not, traders, you better go take a look at them for yourselves and get a gauge on where we're going. Now, for Monday's trading, we are looking to sell rallies in S&P and NASDAQ, probably Euro currencies as well. Bonds put in a major swing day looking like they want to go lower. However, if the S&P gets nailed hard on Monday, bonds will have a flight to quality and go up. So we're not going to touch that swing day, at least for a day, and let's see what the bonds want to do with it. If, in fact, the bonds go lower on Monday, we will likely be selling them on Tuesday. We'll take one day at a time. All right, traders, make sure you keep your emotions out of trading. Boy, oh boy, now in this time, in this climate that we're in, if you are trading emotionally, your account's been at least halved, if not completely wiped out this week. Last week, I should say. I know, because I watch what other traders out there are doing that aren't at our site. Boy, oh boy, it looks like there's a lot of people getting hurt out there. Not if you're hanging with us, traders. Last week, we had a winner on Monday, we had a winner on Tuesday, we had a winner on Wednesday, we didn't trade Thursday, we had winners on Friday, and half the premium room, if not more, took out over 80 points last week in profits without ever having much go against them. So the techniques that we are applying are absolutely working. You can see it in real dollars in these traders' accounts that hang around the Omni Trading Academy. So make sure you come on down. Again, it's www.livewithoscar.com. Allow me to be your personal analyst. Come into our chat rooms where we huddle together and we figure out where these markets are going to go. There are interactive classes that take place during the week when markets aren't too busy. There you get to see my techniques live while I'm on camera and microphone, and I lend out my desktop to you so you can see the charts that I'm displaying. It's a really great way for you to learn, traders. Come on down. All right, traders, give me a buzz anytime there tonight, 702-629-4755. The email, forget the email, I don't feel like saying it. Traders, don't forget, keep your emotions out of trading. One of the best ways I can help you with that is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.